Federal Reserve has definitely messed it up, all right? And will the market bottom out in February? That's interesting because we just saw the Dow coming down 700 point last night. So there's a good reason for that, and it's due to Larry Williams' seasonal pain indicator. So all this in the very powerful jam-packed content today. So watch it till the end. All right, guys, first of all, this is a very powerful inverse indicator. Now, every time when the NAIM exposure index, in short, the US fund manager's exposure to stock is at the highest point, now by right, it tells you that it's a good time to buy, right? But apparently, whenever it peaks, that is where the stock market actually tanks. So you can see that every time when this index is near the high level, the stock market actually came off. So this time around, are we going to see the same thing? I think we are. And that's the reason why we've been calling the sell for the last 2 weeks. Now, one thing to note, Stanley Druckenmiller and Paul Tudor were betting against the US bond market, and they were shorting the bond market, as we know. And I mentioned to you that there's a very good chance Santa Claus has skipped the rally, and likely S&P may drop back to 5796, and apparently it's happening right now. So with the bond market coming down from 95 region, from here itself, and it's down all the way to now 85, it's a very, very good profit. I think most likely there'll be some covering of profits soon, and I guess this gap here will be the one that I'm looking for. So in fact, I feel that right in the short term, there'll be some more selling in the market, but we could be near a potential intermediate bottom. So what do you think? Let me know in the comment box. So let's go back to last night. Now the Dow tumbled 700 points, all right, due to a strong jobs report. Now this is interesting. A strong jobs report should be good for the stock market, but yet the market actually sold off. So what actually happened? Now basically the market is leaning on the point that since most economists post that the increase of job is about 155,000, and yet it came out 256,000, and then the unemployment rate is 4.1% versus the expected 4.2. So all this tells you that the economy is good, but it's not for the market, right? So that means that the Federal Reserve can consider not to cut rate anymore further. So in fact itself, right, there were people looking at more rate cut in March, but now this odds has basically came down quite a fair bit. And there are people speculating that there'll be no rate cuts until even like July or even September period. So let's look at the whole point right now. Why I feel the Fed has really messed it up. Now, the thing is this is actually a very incredible number for 256,000 jobs in December, okay? That means that it's actually one of the highest 6-month average since 2024. But yet again, when the market look at this itself, they feel that there's no need for rate cut, and the market was expecting that. So with now the rate cut chances of going there is low, people are worried what will happen next. And of course, you look at this right now, every time when the 10-year yield start to move up, the stock market actually came off. So it's very clear that we're going to see something like this. And the 10-year yield may actually go up to as much as 5%. So if that actually happened, that means that this curve will continue to rise, right? And we've seen it before. Every time when this actually happened, the recession is always near the corner. So I am pretty confident that 2025, 2026 will see a technical recession. And I believe that you should be prepared for this. So with all this thing all happening right now, you can see that even a temporary help requirement is actually coming down. And every time when this thing drastically comes off, we also observe that a recession is always around the corner. So to wrap it all up itself, right, I'm pretty confident that the Federal Reserve are now very worried about Donald Trump. In fact, they feel that Donald Trump policy is going to create an inflation impact. And I totally agree with this because we all know that he's going to declare national economic emergency to justify the universal tariff. And when he does that itself, it will spread down globally. And when that actually all happens, people, the market, the commodity prices will definitely go higher. And that's the reason why I posted in my own Facebook. I believe that right now for Singapore, a heartland area, a plate of chicken rice is average about $4.30. I believe that you'll hit $5 this year. And of course, like wonton mee, even our classic bread, cakes, and kopi will definitely hit very astonishing level. So guys, buckle up because this is not going to end, because now the World Bank Group actually says that they don't think there is going to be another commodity rise. Now, but versus what I feel is different, right? So that's why I tell you this. So this is what I feel that when the global market don't tell you this, but we in Singapore, we can feel very easily. I believe that we should follow what we see. And because of that, we can see right now, the consumer inflation is expected to break out the 40 years high. And think about this, if Donald Trump really wants to bring down the trade deficit, he will really have to bring and bring in more money to the market. And when that actually happen, inflation will definitely go out of hand. And I think Reserve do know that they are going to head into this. So with all this happening in the market, now crude oil price has just basically break a long-term trend pattern. Now last week I was telling you guys that it's time to buy some OXY, and you can see the reason. I believe that Warren Buffett really knows his things very well, just like he buy Japanese stocks way before they went up. And so now for him to load in so much OXY, I believe that he knows that the inflation is going to hit. And with that, I believe that the crude oil price will hit the $80 target. And of course, when all this happens, this will become a big issue. And based on what we can see now, inflation could be the primary driver for all major asset class for 2025. And with the meeting that's just 3 weeks late, less than 3 weeks away, we're going to see more volatility. And in fact, some people actually put it side by side of what happened in 1980s to today now. It could really see that there could be a crazy inflation move, the second whip that Michael Burry said in 2025 to 2027. So all this tells me that, guys, you need to prepare yourself. So the thing is, you may ask, then where's the bottom, right? Well, I have searched through internet, YouTube, and I realized that Larry Williams did a video recently, and he is one of the best technicians in my opinion. And I felt that certain thing that you should learn from here. Now, this is the Dow Jones back in year 2000 versus Larry Williams indicator, and you can see it's pretty accurate. So the one in the indicator in blue, and the candle, this bar chart is the one in Dow Jones. You can see that he has perfectly spot on all the market bottoms and the peaks in the market, right? So this is indicated pretty good, all right? So when we put it now to 2025, you can see that this seems to tell us that, yeah, there could be some selling into the first 1 to 2 weeks, first 1 month, 2 months of 2025. And then after that, the market is supposed to stage a recovery, and I suspect that this will actually really happen. So you can read more, watch more on this on the channel. It's actually on, so we'll be back to you guys again. It's on Stock Charts TV, or you can actually subscribe to his this charting newsletter. It's very worth it if you ask me itself. So with this combination of mine, you can see that, right, this one he mentioned that based on the bots ETF on the AI, that it could be a good chance that the NASDAQ could be bottoming out somewhere in February, and it's somewhere along the direction in line with my view too. So if that's the case as well, are you telling me that January there'll be further selling? I think that's going to be a good one. And then when after that, when Donald Trump on 20th come in as a president, there could be some volatility. And then after that, that is where the market will bottom. What do you think? Let me know in the comment box. So for those people who have followed us in trade recently, congratulations. You have shorted the market. Well done. That was the first wave that happened back in this 5th of December. And then recently, there's another wave. We were telling you the boys have accelerated their selling recently, and even the retail has joined in, and that's why we saw the selling. Now it's really trading below the MA30, and now it's trading below the MA200. So I believe that coming next week, there should be a bit more selling. I suspect that we could see a 41,633. All right, let me write down for you. 41,637, or in fact, the number that I would love to see is 41,500. I think that within this range, if we do see that, that will be a good time for you to buy back your short position. I suspect the market will do a temporary recovery. So let's see how it goes. And for those who are involved in NASDAQ, I told you guys to be careful. The last few days, I said that the market is bound to sell due to our indicator. And of course, now it's below the MA30. So I suspect that we also can see a potential bottoming at about 20252 area. And that is whereby I think that you can buy back your shorts and then do some buying from the bottom. Now, of course, I'll tell you more in detail as the weeks progress, and I sincerely hope that you make more money from the market. All right, hope you like this video. Cal signing off. Take care and have a great day. Bye-bye.